if you need to wait, and you need to wait for the companies which you understand to get the right price, let them make money. It's not going to hurt. Don't take unnecessary risk to make money fast, and always think long term. So these are few attitudes which you should have. And the next point is to use reality as a mechanism, right? When you get news flow, for example, when I analyze TCS and Infosys, I was after a month or so, I got this news of Trump winning the election and he's going to impose duty on it, taxes on them, or additional visa fees. That was the news. So I need to understand how that will impact the profit margins of the company, the sales of the company in the future, and whether the company has enough competitive advantage to pass on the cost, or will it lose market share. And then I plug those numbers in and the valuation changes. If the news is not going to impact my company, then it can be a buying opportunity because the share price goes down. So if a news is not going to impact your company, then it can be a buying opportunity. If the news is going to impact the company, then you revise your valuation. Same, another example would be Patanjali and Colgate. Patanjali recently captured some market share from Colgate. So you need to evaluate whether Colgate brand image is strong enough to sustain. So these are a couple of examples. So you always need to use reality as a feedback mechanism for your investments. So the next and the most important step to becoming a great investor is to think like a winner. If you want to be a great investor, you need to think and do what great investors have done. If you want to be good at business, you need to think and do what great businessmen have done. So let me ask you, what is common between Warren Buffett, Mark Zuckerberg, and Sachin Tendulkar? The common thing is that all of them had mentors and teachers who would guide them to become successful. Warren Buffett had Benjamin Graham, whom he followed. So Mark Zuckerberg had Sean Parker, and Sachin Tendulkar had Ramakant Achrekar. Again, let me give you a better example. If you wanted to climb the Mount Everest, would you just fly over to Nepal and without any training or without an experienced mentor, would you just start climbing? No, right? Doesn't make sense. You'd first hire a trainer and then he will teach you step by step how to climb the Mount Everest. So why would you try to do that with your investments all by yourself? Again, I have spent lakhs and lakhs of rupees over the years to master this art. And you know what, mentoring works. It really helps and it expedites this learning process and gives you results when you know someone and you can ask someone all the way along what to do, what not to do, and it can help you save a lot of money. The fact is, and the reality is, I cannot cover everything in just 90 minutes. In this webinar, I cannot cover everything else. It's impossible. Investing is such a large field and you need such in-depth knowledge. There are so many strategies that I cannot cover everything in just 90 minutes of webinar, right?